And now let's put the spotlight on Cipla, because from the Nifty 50 earnings, that is something that we will be tracking. And for tomorrow, Cipla will be in focus. Firstly, when we talk about the numbers, in the numbers, the key to watch will actually be the margins, because on a sequential basis, we are expecting a bit of a jump up in their margins, given the fact that Q4 did not perform that very well. And because of the move in their domestic business, because of the improvement in their domestic business, the margins are expected to have some bit of a push, and 24.5% is what we are expecting, though on a YOY basis, that will still decline. Other than that, in terms of the sequential improvement in the revenue, a 5% jump is what we are expecting over there. Similar number uptick expected on the EBITDA as well. And on the profit figure, we are expecting 1,207 crores. Now let's talk about the factors that could be at play. So when it comes to the US business, that expected to be a little bit under pressure, given the fact that G Revlimid contribution will be the key monitorable, because do remember that this particular drug did impact Dr. Reddy's numbers as well. And let's see how Cipla numbers pans out and get impacted because of that. But India business expected to see a growth of 8 to 9%. So all in all, a decent set expected, but the key to watch will be the margins and the management commentary going ahead, especially with respect to US and India, and the margin picture overall. How do they see that shaping up? For now, the stock is holding on to gains of 1%. But Rajat, just wanted to have your take on Cipla and the whole pharma pack as well, because today we have seen Dr. Reddy's despite a miss. The forward looking, maybe that is getting factored in with respect to Dr. Reddy's. That stock is doing well. Cipla too is up in trade today. What's your expectation from the pharma pack?
Yeah, it's interesting you asked me that. I was looking at this myself, and Cipla's earnings are likely to, be impacted by G Revlimid, the patent going off. And naturally, there would be a price correction to this. I am really positive on Pharma Pack. And talking of Revlimid, one stock, I'll give a full disclosure before this. One stock that we've added to our portfolio for similar drug going off patent is Natco Pharma, actually, and they're struggling with the same because Revlimid's patent expires in January 2026. And right now, if you see Natco Pharma, that company is trading at a multiple of about 9, and its historic price to earnings multiple is about 24, 25. Now, the expectation is that after Revlimid patent goes off in Jan 26, they would have a 30 to 40% erosion in their profitability. So naturally, profits will fall. So the price to earnings multiple, which looks really cheap, is not really so cheap, because they will take a major hit on their profitability. But be that as it may, why we have added this is because, even minus that revenue, the earnings multiple should be around 14, 15 to my mind. Now, there is an overreaction with, these generics going off patent. And keep in mind, Natco is a company which is completely debt-free, has a huge war chest to make acquisitions. They have a first to file advantage on a generic molecule of semaglutide, which is a $15 billion market in the US. And they have at least 15 other products in the pipeline, which their management, just talked about. I was there on the call. And, I'm really positive on that one stock in the mid cap space. It's about 1,000 rupees right now. I wouldn't be surprised that at these valuations, and they've had a history of coming up with, they came up with Tamiflu in 2017, 18, which helped them. These patents that they get last for about 180 days, for which they make a massive revenue. And then, they slowly have a price erosion, which is what's going to happen. So many pharma companies are struggling with this. Personally, you asked me about pharma sector. That's one stock that we've added. I can disclose that. And that's where we made some buying for a lot of client portfolios. I like pharma as a sector right now because, most of the bad news for pharma in terms of generics in US and stuff is sort of priced in.
Okay, so that's the take on pharma. Let's put that conversation on hold in terms of sectors, because we understand that India and UK free trade agreement, the FTA, has been signed. Those are the visuals we saw a moment ago of PM Modi meeting Mr. Keir Starmer, the Prime Minister of the UK, and minutes within that meeting beginning, the free trade agreement has been signed. We have on the phone with us Mr. Jayant Dasgupta, ex-ambassador India at the World Trade Organization. Mr. Dasgupta, good afternoon and thanks so much for joining us. Momentous occasion indeed for us. The free trade agreement with the UK has been signed. What are your first thoughts on this, and what kind of impact could it have on the trade setup back home?
I think it is a momentous occasion because this is, apart from an agreement which we had with Australia, this is the first really significant FTA with a developed country. And an FTA normally works very well if it is between a developed and a developing country. Of course, that is an old concept. But having said that, there are many opportunities which are going to open up for India vis-a-vis the UK. First of all, in the labor-intensive sectors such as leather and footwear, textiles and clothing, gems and jewelry, furniture, sports goods, the UK currently employs about $23 billion worth of goods from all over the world. So a significant portion of that can then get routed to India because of the zero duty access. The second thing is that
Okay, I believe we've got Mr. Dasgupta on a patchy line. We'll try and reconnect with that. But well, yes, the latest update is that India and UK have signed their free trade agreement. And my colleague Sumita she has tracked this story very closely. And we'll try and get her in a bit from now as well. But we have Mr. Dasgupta back. Sir, please continue what you were saying about your first thoughts on this agreement that has just been signed. Okay, I believe we have patched that line. Let's take a look at what stands to gain from this free trade agreement. Textile is going to be one sector that could be doing very well. Just want to take a look at a couple of these textile stocks. Gokuldas Exports, for instance. You have leather shipment that has now reduced. In fact, the tariff on that and the duty on that has reduced. Key labor-intensive sectors are going to be doing very well. Agriculture and allied sectors will stand out as the major beneficiary as well, with Indian farmers gaining market access for high-value products like vegetables, fruit, basmati rice, cereals, animal products, beverages, oil seeds and dairy. So the entire consumption pack could do well. Agrochem could do well. A lot of sectors that could be doing very, very well on the back of this FTA that we've signed. Another sector that could do well and benefit from this a lot is the entire MSME space. So all eyes are going to be on how this trade deal pans out for us going ahead. And like Mr. Dasgupta was just saying, that it's the first formal FTA that India has signed with a developed country. And India being a developing country at the moment, this has come at a very crucial point in our economy. But let's once again shift focus and keep the conversation going. We were just discussing pharma on the back of the Cipla numbers that are expected tomorrow. But other than that, let's also throw the spotlight on Bajaj Finance. It's the other nifty company that's going to be coming out with its numbers tomorrow, where the margins are slightly expected to moderate. What could be the reason behind this, and what should the street pencil in when it comes to Bajaj Finance? Let's bring on board my colleague Varun, who is joining us with a list of all the expectations. Varun.
Well, so we are expecting a good growth quarter from Bajaj Finance, especially on the back of the quarterly updates that the company has given, because the company has said that the overall customer franchisee that has gone up by around 21%, and the new loans book that has gone up by around 23% on a year-on-year basis. Also, the asset under management that has risen by around 25%, and the deposit growth has been 15% for this quarter. On the back of this, we calculate that the NII growth would be around 22.5%, the PPOP that would go up by around 21%, and also the profitability of the company that would go up by around 18.8% to 4,646 crores. If you look at the overall operational performance of the company, that would be good, but yes, the margins that could be under pressure slightly. We're expecting the margins to contract by around 5 to 10 basis points, not more than that. And if you look at the overall asset quality, that would be stable. In fact, Street is expecting that the overall credit cost of the company would be on the lower end of what the company used to earlier put forward. So it was like 2 to 2.3%. That is the normal trend we have seen for the credit cost for the company, and we expect it to be on the lower side of what the company used to give before. So it's going to be a steady quarter for the company. NIMs a little contraction, but yes, asset quality would be stable.
All right, thank you so much, Varun, for getting us all those details. But hang on, because SBI Life 2 will be reporting its numbers. Actually, today the numbers are weighted. But Varun, tell us, what is the street penciling in?
Well, we are expecting a single-digit growth quarter for SBI Life, although it would be better than what the industry has reported. For example, the AP that would grow by around 6%, the VNB that would grow by around 7.5%. On a quarter-on-quarter basis, there would be a decline. Keep an eye on the VNB margins because we have seen the VNB margin increasing across industry. So here also we are expecting on a YY basis the VNB margins to increase from 26.8% to 27.1% on the back of better product mix. But yes, on a quarter-on-quarter basis, the VNB margin is expected to decline. But on a year-on-year basis, the overall results are expected to be decent enough, and especially when you compare it with the industry, it is expected to be a decent quarter for SBI Life.
Okay, so that's what to expect from SBI Life later as well. So all eyes are going to be on a couple of these financials as well as insurance plays. Arpit, give us a chart check on some of these major insurance companies. Insurance as a sector is something we haven't spoken about in some time. You have SBI Life or maybe some general insurance counters. How are these placing on the charts? How are they playing on the charts right now?
So if you see overall the financial and the NBFC pack, so if we talk about the insurance space as a whole, so we've seen a good rally from lower levels, particularly talk about the chart structure of HDFC Life or SBI Life. From last couple of weeks, however, we have seen some corrective move as the broader market is still underperforming. So looking at the overall from the monthly and the weekly setup wise, definitely the structure, the bigger trend of the structure is still intact in the insurance pack because the entire financial sector is looking strong. So if we talk about the insurance within that, HDFC Life looks relatively better because after a long time it has given a monthly breakout above 730, 720 levels. Some cool off has seen from the high levels, but positionally the structure is good. So a buy and dip counter can be seen. Along with that, SBI Life also, if we look at the chart structure wise, definitely a strong uptrending counter. From last couple of weeks, it is sideways, but still it is holding above around its key moving averages. So it's kind of a buy and dip counter. Momentum is missing, but definitely can be dips of 2 to 3% lower levels. SBI Life and HDFC Life would be a preferred pick within the insurance pack going forward.
So that's the call coming in for the insurance counters. But with this, let's also get you some of the BTST or rather STBT ideas from both of our experts then. And Akshay, you go first. Tell us which is the stock that you wish to recommend to our viewers.
So I have two trades, both in the pharma and the healthcare space as short-term buying trades on the long side. The first one is Loris Labs, extremely strong chart structure, has been in a range since the last 7-8 trading sessions. Momentum has caught up again today. And with the broader setup, the stock has, my belief is that this stock should be heading for targets of 857 and 871 from the short-term scenario. You can maintain a stop loss of 813 on this trade. And the second trade is in Cipla, whose results are, I believe, scheduled for tomorrow. I think last 4 months, if you have a chart check, 1450, 1460 is a very strong base which has been set up for this stock. And the way the prices trade is that it recovers from 1415 and kind of halts around 1540. So we're expecting targets again up till the upper end of the zone till around 1512 and 1527. These are some targets you can work with in Cipla. Keep a strict stop loss because results are due and you do not want to be caught on the wrong side in case of any surprises, but maintain a positive view and looking for targets around 1530 plus in Cipla.
Okay, so those are some of the ideas that Akshay is liking. Arpit, what about you? Some BTST ideas for our viewers today?
So very selective buying is seen, but if we talk about the sectors that are food delivery and the metal pack is still strong. So if you talk about the ethanol, so after a fantastic result, the stock definitely open gap up, but holding very strong on the weekly and the monthly setup. On the daily scale, the structure of high low intact. So ethanol would be a first BTST call with strong closing above 305 levels, strong bullish candles. So one can go long with keeping stop loss of 303 for an upside move towards 322 and then 330. Second would be from the metal pack, Jindal Steel and Power. So if you see overall the market price has been mixed, but Jindal Steel and Power is holding very well. On the weekly setup, a range breakout after almost 10 weeks above 985 levels. Strong bullish candle on the daily and the weekly setup. Right now also intraday also we have seen good spike above 985 levels. Closing above 985 definitely triggers a momentum towards 1070. So Jindal should be a second idea. Can go long at current levels with keeping stop loss of 965 for an upside move towards 1060 levels.
All right, so that's the day. Those are the calls coming in from Arpit as well. But like Arpit has been mentioning, that the life insurance counters are looking very good, and the numbers also seem to be good for SBI Life, because we have the first number that is coming in for the company. 590 crores is what the company has reported in profit, and that's a jump of 14.5% as well, and believe that it is better than the street estimate along with that. So it's a beat coming in on the profit figure indeed, and SBI Life has moved sharply from those lowest point. But Arpit, why don't you only give us a chart check moving above that 1800 mark? What does it mean for SBI Life?
So if you look at the chart structure of SBI Life from last almost couple of weeks, and from last almost 2 to 3 months, it's trading in a broader range between 1760 to 1850 levels. So holding a well above 1550 DEMA. So I think closing above 1820 can trigger a momentum towards 1840, 1860. So 1820 would be the level to watch out for. Immediate basis 1760 would be a major support zone. Till it holds above 1760 levels, the overall bias would be positive for an upside move towards 1840, 1860 levels.